international discussion by picking some stocks. Joining us, Derek Izuel, is the Chief Investment Officer at Shelton Capital Management. Derek, welcome back to the show.
Pleasure to be on again. Good to see you.
Thank you. Likewise. Give me first kind of your general international view. How much of a portfolio should this be? Are valuations still appealing globally versus the U.S., or has some strength in Japan and other areas taken away some of that?
Well, that's true, but certainly the valuations edge is still there.
Okay.
You are right. There's been a tremendous run in Japan, and that at least for that particular part of the world, that spread is not as attractive. There's a lot of good things going on in Japan that justify the increase in valuation they've seen. But certainly in the rest of the world, you've got a definite edge in valuation and a far less concentrated opportunity set as well.
All right, let's start with Japan then, as their economy and their stock market seems to love a little tighter policy. They're like the inverse of the Western world right now. We hike rates and people freak out. They hike rates and they're celebrating. So how do you capitalize on that? Are you buying a ramen company? Am I reading that right?
Well, the ramen company is really about the ramen company and not so much about Japan. I mean, there are great things going on in Japan right now. The thing that's interesting is that we talk about interest rates and how they relate to inflation. And yes, they go up, and that means maybe we're having more inflation. That's bad for the stock market. But don't forget, deflation is also bad for the stock market. So when rates are going up because you're getting away from deflation, that's what's going on in Japan. That's also good. We want that Goldilocks where interest rates kind of sit in the middle and stay stable and inflation isn't too high. That's where everybody's the happiest. Now for Toyo Suizan, which most of us in the U.S. probably have eaten their ramen when they were in college at some point. The Maruchan brand is their biggest ramen brand. Big momentum stock. It's a small stock, but lots of momentum. And there's more upside for them because a lot of their costs have been going down. Wheat prices that they've been getting are lower. And so there's a lot of good things going on with this company. And it's a good place to get a small cap exposure in Japan.
Okay, so inflationary force is not a threat there. They're working as a tailwind, actually?
Yeah, it's a benefit because they've been in a deflationary environment for a couple of decades. And inflation is bad, deflation is really bad. Think Great Depression, right? That was a deflationary cycle. And in even the threats that we had, the great financial crisis, our big risk there was deflation, not inflation. So when you get relief from that, it's a big benefit for that particular market. And Japan it looks like it's finally coming out of that after many, many years.
Yeah, that's a good looking ramen stock there. Pretty big run. What do you guys think it's worth?
Ready to go buy another case of Maruchan, right?
Yeah. Hey, I'll love me some ramen. What do you think it's worth? It's at $65 right now.
Oh, good question. It's a momentum stock. It's going to keep going as long as it keeps that momentum going. So it's not so much what its valuation is, it's whether the underlying fundamentals just keep clocking along. And as long as they do, there's still upside in the stock. It's when things, you just have to keep an eye out for when the fundamental trends on a stock like that turn. And that's when you want to get out. Valuation is often not, it's important, but not as important as other stocks when you're talking about something with this much momentum.
Okay. All right. So the Japan exposure in a very good stock market right now. How about let's go to Latin America. Let's go to Brazil, where you're looking at a financial services company. Tell me about that. Is that right?
Yeah. So Itaú Unibanco, one of the biggest banks in Brazil, and available to U.S. investors as an ADR. If you could, and unfortunately it's not available in ADR, is by the holding company that owns a big chunk of it, which is also called Itaú, owns this bank, plus a bunch of other Brazilian materials and IT and technology companies, a broad swath of industries. There's good things going on in Brazil, and when you're looking at emerging markets, it's one of the more expensive emerging markets, but that's because conditions there are fairly stable. Remember, this is Brazil, but still, the Lula administration is fairly stable, looks likely to be reelected. Stability is something you want to see in emerging market countries. And Brazil has been a big beneficiary of some of the reshoring that's been going on in the world as companies who have been putting their manufacturing and other operations in the Far East and particularly in China, are starting to bring them back, maybe not necessarily to the US, but to nearshoring, closer countries like Mexico and Brazil. So they've been a big beneficiary of that. So the play on Unibanco is just buying one of the more solid banks in a country, in an emerging market country that's really seeing some solid trends.
Okay. And the political environment there, a little bit more amenable to investing, not as chaotic, or how do we feel now after a pretty maddening couple of years?
Well, remember, chaos in politics in Brazil go hand in hand, but so it's all a relative basis, although perhaps here in the US we may take some lessons from them. But yes, on a relative basis, Lula is in a good, stable position. Sure, there's opposition, and as there is in any democracy, but compared to most emerging markets, there's a fair amount of stability there. You see the same thing in Mexico, where say what you like about, you may or may not like the leaderships there, but it has a pretty solid hold on the country, and there's some stability there. For business and investing, stability is the most important thing. You want to see stability and see business-friendly environments, and we're seeing that with Lula in Brazil right now.
All right. Last one here. Make sure we don't miss Europe in the convo, but it doesn't seem like very tech or growth-oriented necessarily. I don't know. Is there growth in steel?
Right. Well, no, steel may not sound too exciting. Obviously, I have a very cyclical business. But the SSAB, which is a Swedish steel company, a very interesting stock. It's somewhat higher end steel. So while it's still exposed to the cycles that the steel business goes through, it has a strong foothold in higher end steel production, and thus has, on a relative basis, more pricing power. And also, there's the opportunity here that this is one of the most, if not the most, environmental friendly steel companies in the world. In fact, just yesterday, there's an announcement from the Department of Energy here in the US that they're working with SSAB to look into fossil fuel free or solutions for producing steel. So and SSAB is who they went to discuss this kind of partnership. So it shows a sign of the direction they're going when it comes to steel production. So in so much as you believe that is a trend that will follow for the long term, sustainability of production for many different types of products, SSAB is a place to be.
All right. Shares basically a little higher over the past year, so storing the value in the trade. Hard to beat the ramen stock as far as performance goes. Suki. All right, thanks, Derek. Fun chat. Appreciate the details.
All right, take care.
Yeah, cool stuff. All right, Derek Izuel, Shelton Capital Management.